Here's the top questions we get for hard money lending. I'm Brian Chu.
I'm Jamie Jiang.
And we're with Rate DNA. If you're an investor who needs help with any financing or just wants to connect about contractors, suppliers, any other kind of resources, we'll be happy to help. So with a hard money loan, the primary focus of whether you qualify for it is mostly the potential of the project, of the property that you're buying, and not on yourself as an individual. But of course, there still will be some variation from person to person, and a borrower still needs to be at least moderately qualified to get a hard money loan.
So what are the type of things that people need to bring to table to qualify for a hard money loan? So first of all, the deal matters a lot. If your property is in a great location, that will add score to your hard money loan. And if you get it with a lower price than market value, that will add scores too. And second, we will look at your real estate experience. If you're a very experienced flippers or investors who have done at least 10 projects in past 3 years, that will be our highest tier customer. But if you're not that experienced, we can also help you out as well. If you never flipped the house before, we can still do your hard money loan, but expecting your rate and the price will be higher than those experienced borrowers.
So if you have horrible credit, you can still qualify for a hard money loan. The terms will be better, like your interest rate, for instance, will be better the higher credit score is, but you can still do a loan with a lower credit score.
So why should you turn to hard money loan versus a traditional mortgage? You should consider the condition of the property you are buying. If it's not a very perfect condition, the conventional loan might not lend to you. In that way, you can turn to hard money. And for hard money, like Brian just said, we look at the property, we look at the deal, not only the borrower's income or anything that will limit you to get qualified for a conventional loan. We just based on the property itself and the borrower's experience.
So generally, what people use hard money for is for the acquisition of the property, so actually buying the property itself, and also for the construction costs. That can be a rehab, or it could be, say, building a completely new building.
So for hard money loan, lenders like us will take more risk than the conventional loan lenders. Let's say if you use a conventional loan, the property would be like a primary residence, but if you choose hard money, the property can only be investment property, which increases the risk for lenders. Sometimes the property is very ugly that the conventional lender won't take it, but only hard money loan can fund on that property. Do you have to use LLC as borrowers? It depends. Sometimes we will require you to use an LLC as a borrower, but sometimes not. But you have to use a person to be a guarantor.
If you're an investor who needs help with any financing or just wants to connect about contractors, suppliers, any other kind of resources, we'll be happy to help.
If you find it helpful, subscribe for more investment property content.